Perth gets left behind. Let's have a look. Hello everyone, I'm Florian Heise and welcome to another episode of Heise Says. I have my stein of coffee, and before I relax on a Friday, I know you're all ready to head out, or you're probably heading home. I thought we'd read through this article about the housing price rebound in October, because I logged into my bank and they had a valuation for my house. And I had a look, and it's gone up. You know what it must have been? It must have been that coat of paint on that wall we put in the schoolroom at the front. Because if you don't know, we bought a 100-year-old fixer-upper, and we're slowly but surely, very slowly, rectifying it. And we've started painting some of the parts of the building we're going to retain. As architects, we plan to lift up and build underneath, and it's a lot of work. One advantage of these old houses is the timber is like steel. It is like you try and put a nail into one of these old hardwood timber members. It is a lot of work. You always pre-drill. But it definitely was that coat of light blue paint that Rachel put on the schoolroom that drove up the value of my house. I'm sure of it. Corelogic is spying on us and is taking that into account. Or is it something else? So let's have a look at this article, because what's interesting is that Perth has been left behind in this apparent property growth, which I think is in line with a lot of the issues that people are highlighting over in Western Australia at the moment with regards to property prices. So, the property market has gained momentum, with house prices enjoying their sharpest monthly rise in more than 4 years. Nationally, house prices rose 1.2% over October, the fourth consecutive month of rising values recorded by the Corelogic Home Value Index. Once again, the biggest markets of Melbourne and Sydney underpinned the overall strongest results. So here we have, again, Sydney and Melbourne are carrying the whole country. And I would bet, I'm of the opinion that we're in a two-speed housing market. You've got the upper portions of Sydney and Melbourne are doing quite well, the higher-end stock and the quality suburbs, and then the rest of the country. We saw that in Melbourne, where all the outer suburbs had dropped, some over, sales had dropped over 25%, land value in some areas had dropped over 20%. And now we're getting other news the day after that everything's accelerating. It's to do with the data and where it's coming from. I think overall that there's another piece I read where, when we're looking at silver shot down, gold shot down because of renewed confidence in the US-China trade deal. And now a day later, it's back up over $18 for silver and over $1,500 for gold, because there's some doubt now in the discussion. So overall, the markets on a global level seem to be quite responsive and finicky and emotionally driven. And I would argue that's going to flow through to our economy as well, and to the housing sector here in Australia. So the Melbourne property market rose 2.3% and Sydney 1.7%. Perth was the only capital city to record a fall, down 0.4%. Corelogic Research Director Tim Lawless said there are a number of factors behind the comparatively strong rebound in Melbourne and Sydney. So tighter labour market conditions and stronger population growth relative to other capitals, coupled with the stimulatory effect of the lowest mortgage rate since the 1950s and improved access to credit, Mr. Lawless noted as the key drivers. Mr. Lawless said stamp duty exemptions for first home buyers were also driving demand under specific price points. So, accompanying the trend towards higher housing values has been an increase in sales activity, Mr. Lawless said. Although the annual number of settled sales remains around 17% below the decade average, there's been a clear upwards trend in buyer activity since June. Well, we've had several interest rate cuts, everyone's got their tax back, maybe they're feeling a bit more confident, and maybe people are making the leap. Combined with easy access to money now, particularly from the APRA requirements, is it all coming together? Is it? Maybe people, that may have gone for an apartment are now also going to housing. But one still has to think if it is sustained. If it is sustained. I mean, if it's gone up, you can take advantage of it. Fantastic. Corelogic Home Value Index. So Melbourne is up 2.3. Then Sydney, 1.7. Then we have Hobart. I'm surprised at how expensive Hobart has gotten. We've got some viewers from Tasmania just showing how much it's gone up. And because I remember when I was down in Lonnie and Hobart for a uni trip, and when I was working for a Tasmanian firm, and I was surprised how cheap housing was there. It just was insane. They were comparing our salaries to the draftees down in Tasmania, and I'm going, well, you can't compare us to the Tasmanians. A house in Queensland costs a lot more than one in Launceston, but I guess that's kind of changing now. Brisbane is up 0.8. Then you've got Canberra, and then Adelaide and the regions, and then Darwin. Poor old Perth is going down. So a market trough. On Corelogic's estimation, the housing market appears to have troughed in June. However, they are still below their peak, with a 5.7% gain since then, still yet to make up for the more than 8% decline over the preceding 10 months. Mr. Lawler said the smaller capitals had delivered a mixed performance, although the general theme is one of improving conditions. On a rolling quarterly basis, Melbourne and Sydney were up more than 5%, leaving a fair gap in performance to Canberra, plus 2.4%, Brisbane 1.8%, and Hobart 1%. While Adelaide put on just 0.1%, it is still its strongest 3-month gain since late last year. Wow. That's really, really bad for our South Australian viewers, isn't it? The downward trend in Perth and Darwin home values has continued. However, both markets are showing an improvement in the trend rate of decline, Mr. Lawler said. So it's still going down, but it's going down less worse. So it's getting better. The rolling 3-month trend in Perth housing values recorded the smallest decline in 14 months, negative 1.7%, and Darwin dwelling values posted a rare monthly rise in October. Both cities have been the hardest hit by the property downturn, with Darwin down a cumulative 31%, and Perth values 22% lower since mid-2014, and low volumes. While there are more buyers nationally, the number of new listings of properties for sale are still much lower than 12 months ago, down near GFC levels. There's been a shortage of new listings for several years, which has likely resulted in some pent-up demand for homeowners looking to sell, Mr. Lawless said. Mr. Lawless noted the paucity of stock for sales was likely a reflection of ongoing uncertainty and low confidence. Measures of consumer sentiment have been trending lower, with households reading through the low interest rates settings to the underlying weakness of the Australian economy, he said. I mean, yes, if we have a look at the latest data with regards to consumer confidence, where do I have that chart? I'll bring it up here. You can see consumer sentiment has gone down. So, guys, is this a turn? Or are we just seeing the differences in housing or in the data from Corelogic compared to other sources? Do you think my coat of paint on my old Queensland is what's driven up the value of my housing? Or do you think that it's just a blip, a dead cat bounce in a continued decline? What fundamentals are driving this increase? You've got interest rate cuts, you've got easier access to money, you've got more foreign income coming in from Hong Kong and other sources. What else? What else? There's lots of people leaving in the comments going, Melbourne's fantastic! Foreigners love it all the time. I mean, sure, that's great. But is that sustainable? Is that sustainable, guys? So here's the key points. Home prices have risen 5.7% since their trough, but are still short of their peak. Melbourne up 2.3%, Sydney 1.7%, lead the national market rise of 1.2% in October. More properties are being put up for sale, but volumes are still below. So we still have volumes below the national average. So it really is, the challenge is some people are trying to catch the falling knife, catch the dip, to buy or and then to not sell. It's a fool's game trying to do that. Fundamentally, I'd suggest you look at your own circumstances and make a decision based on what's best for you. Because dwelling on, if I had have waited a couple of months, I would have saved this money, or I would have sold for this much more. Oh no! I mean, guys, who cares? It's not really that important. What is important is if there's fundamentals in our economy that's driving this up. That's what is interesting to me, particularly when we looked yesterday at the building approvals, declined 21% since a year ago, particularly the huge decline in multi-res, in apartments over the last 3 years. 60% down in some areas. That is big numbers. That's big numbers. You combine that with mortgage stress. Interest rates have come down, so people aren't feeling the squeeze. Interest-only loans are starting to tick over. The real challenge is if this can be sustained once Australia comes into a recession, or if we can fend off a recession. If the China-US trade, war continues, or resolution isn't achieved as well as people hope, what will happen in the US? I mean, they're cutting interest rates too, guys. It's not a sign that everything's peachy. So let me know what you think. Leave your comments below. Like, share, and subscribe. If you would enjoy these videos and would like to support my content, I have a Patreon and Subscribestar. I also have affiliate links for Amazon, where every little bit helps. I really appreciate it. Thank you very much. And thank you to all the new patrons that have signed up this last month. Thank you very much, everyone. And guys, I'm going to enjoy my coffee. And I was going to do a live stream today, but I bought the Outer Worlds. So, yeah, that's not going to happen. Take care, everyone. Have a great day, and I will talk to you tomorrow. Bye for now.